Hello, guys. Welcome back to Zodiac Trading. So, in this episode, we're going to talk about the China incoming cash crunch crisis. And I think this could be a very important financial disaster that's going to happen in China, especially in the Chinese banking system. What we are going to witness is one of the biggest economy downfall, which is probably going to be greater than what happened in Japan, which was the credit crunch. So what happened was, couple uh, 2 to 3 decades ago, Japanese economy was facing a tremendous economic crash, and the Japan central bank failed to contain the crisis. So the yuan was, the yuan actually went down, and also the stock market and also the real estate market as well. So what happened in Japan was disastrous. So which is the reason why to up to now, like Japanese economy is still struggling through this low inflation and also low GDP growth, and also a series of structural uh, problem. And now I highly suspect China is going to face similar problem as Japan. What Japanese government had been facing like 20 to 30 years ago, a major credit market crunch. So now we can see that the Chinese bank, PBOC, People Bank of China, is trying to release another cash injection via the MLF. So the MLF is a bit different kind of policy tool used by the People Banks of China. So it's a first of all, it's a liquidity tool. So basically, the central bank will inject the money and liquidity directly to the commercial banks, and the commercial banks is going to um, repay the central banks after a while. So this would be a mid-term liquidity facility. But now, as you can see from PBOC and also the recent data, this is currently the largest MLF since December of 2016, which means there's a big liquidity problem in the Chinese commercial banking system. And then we're seeing also, second, we're seeing the People Bank of China offer 1.45 trillion yuan directly inject to the system. So that's a large number. The net injection was the most in nearly 7 years, and the rate on the loan was kept unchanged at 2.5%. So people may ask the question, why when Federal Reserve raised the rates, most of the central banks on this planet would follow, and most of the central banks would raise interest rate as well. For example, like European Central Bank and also the Bank of Japan. Although Bank of Japan is struggling to raise interest rate because of the status quo of Japanese economy, but still a lot of economy system, they are going to follow what the Federal Reserve going to do, because when Federal Reserve raises interest rate, it basically push up the cost of money. So other central banks will also increase the interest rate, and that's what most of the central banks been doing. But on the contrary, as you can see from the PBO's example, instead of raising interest rate, the PBOC decided to lower the interest rate. And a lot of economists, especially Western economists, find the fact uh, quite amazed. They were basically amazed by the results and also extremely confused by the fact that the PBOC, instead of raising interest rate but lowering interest rate. So there's something that you need to know about Chinese domestic market, is that Chinese domestic economy system has huge amount of debt. If the Chinese government uh, raises interest rate, and that actually means in the future, the financial institutions and also the commercial banks are going to pay a lot more because the interest rate been going up. That means you're going to pay more for the interest rate. So that's going to create fiscal burden for the local government as well as the commercial banks, which is the reason why PBOC, instead of raising interest rate, the Chinese central bank decided to lower interest rate. And not only that, on top of that, the PBOC actually, what we're witnessing from the Chinese economy is we're witnessing very low inflation and the dropping inflation. We're witnessing disinflation, but in the same time, we're also seeing lower interest rate. So that's quite weird, to be frankly speaking, because as you can see right now, while the entire economy is suffering the high inflation and also higher product costs, but at the same time, we are having this problem of accepting we are having this problem. Chinese economy is facing problem of a lower interest rate, but at the same time, the inflation getting lower. So we are talking about a completely different case compared to the Western banking system. And I believe a lot of economists and also people who are observer of Chinese economy fail to identify the reason why PBOC been lowering interest rate instead of raising interest rate. That's because of the structure of the Chinese domestic economic system. And third, we're actually seeing the special bond issued by the central bank, and that special we're seeing like 1 trillion yuan, that kind of that worth of sovereign bonds decided to inject and also to be released to help the local government of China. And I think that is the reason why we're seeing a major liquidity crunch, and also the center government understand that they are facing a liquidity crunch. Hence why China is bringing another bazooka and also the financial aid to the system. So Beijing approved the issuance of an additional 1 trillion worth of sovereign bond, and I think this activity itself would not really revigorate or say revive the Chinese economy. The reason behind it is because right now despite the fact that that the PBOC has cut our twice this year, and also with 25 basis point move, we're still not seeing the housing prices gone up. We're not seeing the retail sales gone up. We're seeing continuous and disastrous foreign direct investments fled out of China, and also a lot of U.S. based institutions are having extremely hard time in Asia markets, and I highly suspect these tendency would continue to grow, and hence why it's going to create another liquidity crunch. And at the same time, more importantly, finally, that's going to create a financial crisis for China. So this crisis is more bit like a debt crisis instead of a financial crisis. And the reason why is because the local government simply had a bad habits of building, series of bad debt. And when it's a simple logic, when someone is losing money, someone gone broke, it's probably because this guy actually has less income than outcome, right? Say he can make money from salary or maybe his business by generating revenue. Once he has less revenue, he doesn't have the money to pay back the loan. And if he has to pay back the loan, he will have less cash. And one day, its debtor is going to realize that this guy would have very little cash, and this guy is very likely to default. This is exactly what we have observed on the Wanke case, and we also observed from the Evergrande case. we're seeing these housing giant companies, they just vaporize and it just gone like that. They have defaulted on their dollar bonds. They have failed miserably. So this is for today's episode for people who are interested in what really happened in China. I think I'm trying my best to give you good insights. And again, in this channel, we don't really bullshit a lot. We talked about directly, inside the core and in-depth opinions about the different markets. So if you like my content, please press the likes button for me and also subscribe. And I will see you in the next episode. Goodbye.